Good morning, it's Jonathan Barrett with this week's Market Buzz, and lots happening over in Iran and the US. And it's this morning of the 20th of July, 2026. Okay, what are we focusing on at the moment? I think that's probably the key. And when you really look at it, obviously, we're looking at the geopolitical things occurring in the Middle East and the US. Obviously, the World Cup, which is a very important thing, and congratulations, Spain, for winning that over Argentina. A pretty close game, no doubt. And US equities had retreated amid AI sell-off, which Dow was down 407. Let's see how that filters through, because there are implications to interest rates, as we know, given the price of oil has moved back above US 90. Um, I question we will, and we'll question this during the report, the inflationary risks. Will that gain momentum? Seeing that we've just had a very decent release in CPI and PPI in the States last week. Across that, Trump accuses China of intervening in the US 2020 election. Typical. University of Michigan consumer sentiment index rose to 54.4 in July. That's beating expectations, so quite a positive number there. As we said, core inflation, both on a month-on-month and year-on-year, softened. More on that a little bit later. US housing starts. US jumped 19% to a seasonally adjusted annualized rate of 101,427,000 units. So that was in itself quite positive indeed. Across over in China, industrial numbers came through, slightly softer, but still positive, 5.3%. And retail sales rebounded 1%, whilst GDP softened just a touch to 0.9%. Still indicating mixed things, mixed signals out of China. But I think the interesting draw card is the positiveness of some of the data that's coming out of the States. And in my mind, that's pretty positive indeed. But time will tell. It's always darkest before the dawn, as they say. Anyway, let's see what actually happens in terms of where equity markets take the latest news that we've got over inflation. And I think with softening, you should have expected a little bit of a bullish bias, but given where we've got a lot of reportings this week, particularly on the AI side, it'll be interesting to see how the market transcribes that. Okay, so let's have a look. Let's now take a focus on what's happening, the geopolitical concerns and the stalemate between the US and Iran. And I think that's good to look at in light of the numbers that we've just had in terms of inflation. Remember, the Fed probably will hold off reducing rates. They will perhaps keep interest rates neutral. And is there a possibility for an increase? Well, let's see what happens. And I think it does all come back down to the energy markets, but more on that. But I think the inflation data issued by the Bureau of Labor Statistics in the States was quite positive. Underlying price pressures throughout the economy continue to ease. Core inflation, which excludes the more volatile food and energy components, slowed to 2.6% year on year in June. That's down from 2.9%. Still a little bit higher than what the Fed wants it, but it's coming back, which is contrary to what a lot of us would have thought. The moderation was mainly driven there by softer increases in shelter costs, Medicare, apparel, and household furnitures. But as I said, it does tend to exclude the volatile food and energy components. So that basically sort of says things are softer. So generally, price pressure is not there as much. But will that change given what's happening in the Middle East at the moment? And I do think, if anything, there, we've seen the increases in crude. Perhaps it's too early to tell whether or not those increases will start to filter through, and will the Fed actually be a little bit more cautious, which I think the Fed will be. So whilst we've got a moderation in core inflation and price pressures generally easing, it's also good to consider what the producer price indexes are doing as well. That's I guess, measure of inflation at the wholesale level, because that'll obviously filter through to the whole economy. And despite the fact that we've got renewed pressure, in the oil sector, we do also see a softening. They fell 4.3% in June. And that to me was a sign that, once again, it's the recent bout of increased energy costs having an unexpected feeling throughout the US economy. And to me, that's really incredible to see it. Remember, we had about 15, 20, 30% rise in the price of energy, and that really didn't do too much. So interesting to see how it's all contained and what the fallout will be. And when I do look at it, I think now we really have to focus on what the Middle East is doing, because oil inventories have been drained through the initial conflict. So we're on a much tighter flow. And not only are we on a much tighter flow, we've also got an escalation, perhaps by the Houthi rebels in Yemen around the Bab el Mandeb Strait. And that in itself sort of sees about 12% of global seaborne oil go through that area. And of course, a lot of others. So that's the gateway, I guess, to the Red Sea and Suez Canal. So, so really, we've now got two areas, two pressure points, which might come together. And if that's the case, then we're looking at about a 35% decrease in energy going to the world. Remember, it's not just oil, it's also LNG, which is also important as well. So remember, high stakes at the moment. And not only it's high stakes at a level where inventories are already tight, and that could have a compound effect. So let's see. Hopefully, everyone makes the right decisions, and we don't get that major concern. But when you look at Donald Trump, obviously, Straits of Hormuz issues with Iran, and because Iran supported the Houthi rebels in Yemen, that could be another flip which Mr. Trump has to consider. So quite interesting on that front. Okay, so that's pretty much what we're thinking. But what do we think? At the end of the day, the increase in oil, if it's sustained in an area where we've got tight inventories, will suggest that the Fed will keep rates higher. I don't think they'll move to a dovish turn, but they will remain higher for longer. The fallout on that is obviously the cost of money as it throws through the economy. The cost of money going through the economy in itself will then sort of put pressure on valuations and then equity markets. As a result of that, we'll remain short our equity positions across the board. Okay, so that's it. Let's have a look at now. I'll just share my screen, just some of the technical side of it. And let's just have a share. That's the one I want. And share we do. And we want to share it with there. There we go. Okay, what do we got first off the blocks? We've got gold. Now, I think gold is really interesting, and it remains really interesting. When I look at the price of gold, I still remain pretty long, and I am long. I do like this whole trend line here. This whole trend line you can see, that's been just consolidating. Normally, this is just a consolidation phase. I have seen it roll off into a negative area. I can't see that at the moment, but when I do get to see a little bit of a break there, and if I do see that break, I think it'll be quite interesting. Let's just see if we can draw a trend line, and you can pretty much see what I'm looking at, and why I think it's a good trend line. There we go. That's that trend I'm following, and you can see I've just put it in, and we're getting close. So that's a solid trend line. It's been hit a few times, and the market breaks above that level. Let's say for 4,050, then we're off to the races, and I think that's pretty good if that does. I mean, there we have it there, 4,200, 44,200, and here we've got this another little trend line here, and that break it'll test it. So keep close on that, and there's the hourly, just showing more consolidation. So it might be more consolidation, but something will cause it to flip to the top side. Okay, let's have a look at silver. Like silver, you can see here we've got those trend lines I've already put in, and you can see that this looks like just a great consolidation. And whether it's today, tomorrow, or next week, I remain long silver and gold. I love silver, the story. It's a good story, fundamentally in both technicals. So quite happy to stay on that. Okay, equity markets, we remain short there. This is just going sideways. We've got the highs there, 9,200. We've got the lows just going sideways. Hasn't told us to do anything yet. And I'm quite happy to remain there. Short, there's the S&P 500. A little bit of breakage here. And I think when you look at this one in particular, there's some good divergence there. Normally indicates the market's overdone. We should go lower. We're still feeling that again, we are remaining short both the S&P and both the local markets because we're seeing those valuations will come through. And also we've got some good high-tech stocks reporting this week, and that might see a little bit of an upset there. And it's the Nasdaq, and all pointing down momentum, as you can see there. So quite happy to remain short on those ones. Okay, let's see if we can. I don't think Brent. Let's have a look at Brent. We are long Brent at some super good levels. Right down here in that 1717, so that's doing very well for us. The key here, we've now got resistance, as we mentioned in the report. That resistance is there, it'll stay there. If it gets through that level, then we go high. If not, we consolidate a little bit. No problems in putting a little bit of, taking a little bit of profit off the table. You know, going from 72 to 92, it's a great trade, and it's always good to be able to bank something. You never know what's going to happen with Donald Trump, so always good to bank something there. And as you can see there on the hourly, still quite solid. On the Aussie US, we remain long there, and not really much to report other than it's just going sideways. And I feel that's more of a consolidation pattern occurring. So yeah, so nothing much on that side, but still happy to remain long. Okay, well that's about it from me for this week. It's going to be quite volatile, as we know. Keep your powder dry. Look for those opportunities. But I still think have a look at those the metals. I still think they're pretty positive. So, but apart from that, happy trading. Talk to you next week. Bye for now.